massive week in mining, JD. A massive week in mining, don't you think?
Huge, mate. Rio Tinto, board stoushes. We got potential mega mergers with Glencore and Rio Tinto. Name a few.
That is kind of crazy. This could be the deal of our generation if it eventuates, and it's kind of bizarre that it's resulted in the MD being pushed out of the company by the board. It appears. Well, that's what
Drama.
It looks like. Clearly, GlenTinto in some shape or form is on the cards, and we've called our friend the Koala to help us talk through all of what that means, plus other important news. And speaking of important, JD, you know what's important to me?
Mineral mining services.
Mineral mining services. They are the trusted mining contractor. You got any stranded assets? Have you got any gold that can be mined in this price environment? Have you got absolutely anything that can be mined? Well, that they have a fleet. They will deploy it straight away.
Mate, they've got the team, they've got the track record, and they've got the can-do attitude. Get in touch with Mineral Mining Services.
Can-do attitude. You can call them right now.
Get it done.
All right, mate. But first,
I'm keen to share this conversation, mate, because I think it is a ripper. Beyond what you touched on there, we're going to talk about the Adriatic and Dundee potential deal. We're going to talk about whether we'll see an interloper with Harmony and Mac, which is a super interesting one. One for the tin barons as well, mate. Alphamin versus Metals X, a bit of a comp on who is the better allocator of capital in that interesting neck of the woods. And the uranium fans out there, they're getting a bit of a special mention in why Koala has sort of perked up his ears to NexGen in recent times.
Let's get to it.
Here we go.
Koala. Why is Glencore's latest restructuring maybe indicative of something a bit bigger?
1 + 1 makes the big fella of your homelands, gentlemen, the small fella. Alas, in the passage of time, perhaps the shareholders of GlenTinto shall seek the Freeport multiple, while others shall seek the franking dividends and capital returns that come from Bulk Co. That for franking dividends and tax treatment should probably be ASX and Australia Incorporated and ASX listed with a USADR with such lovely assets, including Pilbara iron ore, EVR, a thermal coal portfolio of Australia, South Africa, and Colombia. Maybe we put IOCC in there. Maybe we don't. We'll put Dampier Salt in there because that creates traffic at Port Hedland, which none of Rio's iron ore goes through, but it keeps the competitors honest. We'll put ferroalloys Glencore in there because why not? It kind of fits into that steel additive model. That manganese chrome joint venture, which, to be honest, I think I know Glencore better than most on the buy side, and I can't name it off the top of my head. Marafi, I think, maybe. So you throw all that in there, maybe throw Winu in there because it's a Aussie copper project. But yeah, you would create a bulk machine.
We're jumping 4 steps ahead here. So what you're saying is that the Glencore Rio Tinto merger is on. You're inferring that from all of the press that's come out this week, including Jakob's exit and the flurry of speculation around maybe his resistance to a deal with Glencore. And now that he's departed, you think that's on, and you're already hypothesizing about a future separation of a bulks business from the copper lithium business.
I mean, this could be the mother of all mining deals for this generation and cycle, and the Koala's accepted he's not going to be getting a fee for it.
What's going on here? Why? Okay, so Jakob's departure, it was very vanilla to begin with, and then it quickly, everyone's suspicious, but it seemed vanilla in the press to begin with, and then quickly it kind of comes out that he'd been pushed out of the board, and the reporting seems to suggest there were differences on 2 things. One being M&A strategy, which kind of seems to be the big thing, right? And the other one was maybe a lack of focus on cost reduction, and there's increased bloat in the structure there, Rio.
Mm-hmm.
Do you think it's valid?
Yeah, I mean, I think we didn't talk about it on Money of Mine, but I think there has been this ongoing discussion since those original talks or initial approaches leaked last year in 2024 that Gary clearly has ambitions for one of the big, call it 300 plus million ton iron ore portfolios, with a long believed Glencore hypothesis that if that went through our marketing business, there's $1 to $2 a ton of EBITDA of incremental margin, just because we're the ones with the marketing strategy. And I think it's a really tough thing for a board to reflect on, because if you gave Gary and the Glencore iron ore team BHP's iron ore book, Rio's iron ore book, or Vale's iron ore book, and they actually delivered $1 to $2 a ton of EBITDA improvement in a measurable way, that would be so damning to so many generations, or frankly, the last 25, 30 years of management and leadership of these businesses, and would kind of further drive the point across that these big companies, Rio, BHP, Vale, I mean, they would have probably been so much better off if they had just gotten fat, drunk, and lazy, digging holes in the Pilbara, running trains and loading up ships and never leaving WA. Because that's really where all the wealth comes from.
Up in the Pilbara, just like any mining region, productivity is paramount. But lately, we've been seeing numbers showing a pretty concerning trend, JD. Productivity's declined for 4 consecutive years. The latest numbers showed a 2% plus decline a year, which doesn't sound like much, but that was the worst print since the GFC.
Yeah, they're pretty astounding numbers, right? And compounding that issue is employee turnover, right? So FIFO ops across WA, not just the Pilbara now, they've had turnover rates of over 20% in the recent years, and at some operations they hit 31%, mate.
That's kind of wild. High turnover disrupts operations. It increases your costs. It hampers productivity. But what's driving workers away? Often, mate, it's the quality of life on site.
Mate, that's where I think you got to think of Grounded Construction. Grounded specializes in super high quality, comfortable camps. They make remote work more livable for the teams doing the hard yards up at site.
These aren't just camps, mate. This is pristine accommodation. It's super livable. Why would you ever want to leave? And when you don't have to leave, guess what? That's lower cost, because Grounded have a track record of building these over 170 projects.
170, mate. That is huge. And to spell it out more, by improving camps, companies can reduce turnover, they can boost the overall experience for all their workers out at site, enhance productivity, and help the bottom line.
Investing in better accommodation isn't just about comfort. It's a move to improve your bottom line. Go Grounded Construction.
Go Grounded.
And ventures abroad have not been profitable anywhere to the scope that the Pilbara has been. So it's always been this little conundrum to me that would any board have the courage to be like, okay, let's actually, all right, because Glencore's not going to do any deal unless they run the show. Like, it'll be a top-down Glencore management culture. What board says, you know what? Let's actually test this hypothesis out. And different CEOs have different cultures around this. I think it's fair to say, I think we would all agree unanimously, BHP, where it sits in Australia, there's just no way with national pride and culture it would be well received if there was a merger with Glencore and Gary and the Glencore guys were now in charge. Your thoughts? Would that be taken well?
I think you're on the money there.
Yeah, there's a reason an American has never run BHP last I checked, let alone a South African.
That's not true. I don't
Marius.
think. An American.
Really?
Anderson in 1998 came in, and
Chip
then
Goodyear.
Chip Goodyear came in 2004. So
I stand corrected. Bravo.
yeah, that is when BHB went from an Australian company that had awesome cash flow and drank at the Melbourne club and was a very Australian centric business to being Americanized and with corporate management. And yeah, Chip came in as CFO and then in 2004 later became the boss before the South Africans came in to run the show, which was a kind of bitter pill to take. And even the government came in and was like, headquarters has to stay in Melbourne. You can't move this company out of our country. And perhaps there's sort of similar type discussions, even though Rio's a London kind of company in a
But
sense.
there's such analogies, right, to the Billiton BHP merge. I mean, Glencore's got pretty shit assets. I mean, EVR's yeah phenomenal in the long run, but like you think of the assets that Glencore has, they're not like they're not of the same quality of there's no Pilbara iron ore there.
And the Billiton assets is
Yeah,
South 32, right?
exactly. So
Yeah, oh,
there are parallels to what a potential merger
well,
could.
let's think about this, guys. The copper business, Koala, that's something Rio and BHP would lust for.
Sure. Yep.
Antamina, 34%. It's run as an independent joint venture. Antapaccay, it's not sexy, but it makes money.
Sure.
And you're not right. You don't have to worry through the cycle. Okay. Congo with cobalt in the ditch, not as great as we all hoped it would be. But Mar and El Pachon are probably more interesting projects than what Winu and La Granja, which they farmed off to First Quantum, if you're Rio. So there is a decent copper portfolio, which what does Rio have? OT, a share of Escondida, which has an incredible capex profile ahead of it, and Kennecott. So there is, I would argue, a superior copper business
Yep.
today. Um, Nickel, I mean, Murren's a wash. If we're talking about Pilbara and like Coalasi assets, Sudbury's maybe past its prime, but it is a good asset in Canada. I mean, zinc's a wash. But then you have the whole Hunter Valley. I mean, we all know Glencore at the end of the day now is really a copper and a coal company. Nothing else just really moves the needle. And the marketing business, which I imagine in any negotiation, how do you value that marketing business? Um, is a huge factor here. But I mean, look, right now at call it 2.8 pounds a share, that's about 378 US, 12.1 million shares outstanding, 46 million, 46 billion pound market cap, 60 US, 1.625 billion shares, 98 billion for Rio. So the current split 68-32. Let's be sporting and put a 22% premium on Glencore, the same premium Glencore offered Tech. You'd end up with a 64-36 split. Gary CEO, Dominic chair. You put the company together, you run it for a year or two. Um, you see how it works, but you have it all structured in a way that you have the option to very efficiently split into base metals co and bulk capital return co. 2 to 3 years down the track once the shareholder register is settled out.
I think one
Uh,
of the
it
obvious questions, sorry to butt in, Koala, is just that the coal aspect and the ESG part with proxies and institutions. Do you think that's an actual point of contention, or that just washes through?
what did Aussie Super just become a substantial shareholder in?
Whitehaven.
That they'll make the argument that they were 4.9 for a long time.
Mhm.
Well, now they're not ashamed to be seen in public.
Yeah, absolutely, absolutely.
Like Glencore made an approach last year. It seems pretty certain at this point. Like wanting to do this deal or wanting to do a deal in some way, shape, or form. Is there any read here where Glencore is desperate, or are they just thinking bigger picture here about the iron ore?
I think they see a huge opportunity in the margin accretion of marketing an iron ore book. And if you go back and look at the Glentech slide deck, I think one of the more cheeky observations, I think they said, I don't have in front of me, like they thought they could be 300 million of incremental EBITDA for marketing if they had techs uh, volumes put through their marketing portfolio. So there's clearly in the eyes of the 800,000 tons of Rio copper, even though we have to acknowledge that the OT tons are kind of spoken for in China. I'm not sure you really add much to that. The 3.3 million tons of aluminum, and remember, Glencore bought into MRN and a few things in Australia, and I believe it was in Jamaica, some alumina bauxite, and has a stake in Century Aluminum. Like Glencore is very bullish aluminum. If you just look at some of the deals they've done in the last couple of years, small dollars in the scope of like what they've done in coal, but it's complementary. Um, and then you have the titanium and iron, you have the IOCC volumes, lithium. Glencore is a trader already, and Rio just bought Arcadium and done a few other deals. Um, yeah, you just kind of look and go, there's clearly more marketing synergies beyond just iron ore. And then just you'd be creating a hundred and before you factor in the premium, and let's even assume some of the premium to Glencore falls off of Rio. Let's just call it the unaffected 143 billion market cap. That's a much bigger company if it got primarily listed in the US in some way, could get into some indices, get into more passive flows. What happens if you get an extra turn of EBITDA on this thing? I don't have consensus EBITDA for both of these, but I assume the combined EBITDA is north of $40 billion. An extra 40 billion. I mean, 40 over 140 is an extra 20% uplift. I mean, that's a lot of value. We're just arguing about how we split the pie here and who runs it. In a world where the tech companies are trillion-dollar companies, what's Exxon's market cap right now? I mean, that's probably like we just don't really have mining companies at the scale that they're in the current of the passive flows in the same way that gets the lower cost of capital. And then everyone asks, why won't the mining companies invest in growth? Why won't you do El Pachon? Why won't you do Mara? Why won't you do La Granja, Winu? Uh, why did the Chinese have to drag Rio kicking and screaming over Simandou? Cost of capital matters. If not cost of capital, you need higher commodity prices. And yeah, Exxon's a $443 billion market cap company. You got to get something bigger in the most liquid capital markets. I mean, there are US investors who don't know what Glencore is because it's just not in their benchmarks. So it just doesn't matter. It's not relevant, and there's no point taking the career risk to study this company and put it in your portfolio. And the US capital markets are the most liquid there are.
The other opportunity that appears, or it sounds like, is kind of on the table for Rio Tinto, or at least it could have been or should have been, and maybe is a reason why Jakob's gone, is the reluctance to do anything more in copper. And I'm speaking specifically the opportunity to buy tech. Why should Rio be more aggressive about Glencore than tech right now?
I think the question is, where would the synergies be in a tech deal? You sit into QB2. I mean, do you really want to get into Red Dog? I mean, RT isn't RTZ anymore. In fact, frankly, the only owner of Red Dog besides tech that makes sense is probably Glencore, but we don't need to revisit 2023. I look at, and then also you still have to deal with the fact that Keevil still has his super voting rights, and probably wants some insane premium. Like, and to we were going to bring it up later, but I mean, you kind of look at Harmony bidding for Mac. What was Mac's original name? Metals Acquisition Corp. I mean, I think it's an open secret they were one of the silver or bronze medalists on Nevis Corvo. Um, and I look at this whole equation. You say, if you want to consolidate in decent jurisdictions, producing base metal, especially copper assets, you're not buying these at accretive valuations anymore. You're buying them at like non-accretive or mildly dilutive with the premise that 1 + 1 = 2.5, 3, because bigger gets you an incremental generalist to be able to look at your stock because there's more trading liquidity, and therefore you have potential to be in more indices. And you see that in some of the copper royalty deals that are done, like when Gold Royalty, GROY, I might have butchered the name, but that's the ticker. I think when they did a copper stream on Adriatic's Vares project, from memory, it was like almost at 425 copper. It was like 8 times EBITDA on an 18-year mine life. And you're like, really? But hey, they did a bought deal in 24 hours and they had all the money in the door. So in these base metals in in the safe, if you will, jurisdictions, people are just like, yeah, just getting bigger is more value add. So, but that's a tough pitch for some boards to take. At least I think with something like Glencore, you have this marketing business, you have this potential. You could split these companies up one day eventually, create a capital return machine, and then create call it a US domiciled base metals company that could chase the Freeport multiple, which also, by the way, wouldn't have a problematic asset like Grasberg. Phenomenal asset, but the Norwegian sovereign wealth fund won't touch it I mean, you put a base metals peer of this size and quantum that produces 3.3 million tons of aluminum and right now more copper than Freeport on a consolidated basis. Um, that gets a crazy multiple re-rate. And as we talked about with Anglo BHP last year and before, everyone's kind of secretly chasing that Freeport multiple. So I think there's just so much more optionality in this Glencore deal. And let's be honest, if you own iron ore, do you really care about owning coal? It's mostly steel making. The thermal comes along with it. Fine, it is what it is.
Koala, to go to your earlier point about how you split up the pie, the relative performance of Glencore versus Rio, take it since discussions were rumored to have started, maybe 8 odd months ago, has been much more to the detriment of totally understand your case for just bigger is better, more flows, all these types of things. But do you think on the margins that still kind of hinders a deal with Gary and co getting a smaller stake in the ultimate merged co? Glencore certainly wasn't in the twos last year. They've with coal prices and everything peeling back, they've been
Yeah,
hit.
I'm sure there is. I think it's a question of just, um, and we had this debate when Glencore Tech came around, and it's like, if you're doing an all share deal, I don't think you quibble about premiums per se. You say there's a pie, and what's the right attribution? I really like. I don't think at the end of the day it's premiums. Is like, should this be a 70-30 deal, a 60-40 deal? Uh, I don't think actually the premium will matter if you're deal speculating in the market because you want to see that big juicy premium. But I imagine any conversation here is like, okay, like we're doing a deal that's going to define everyone's career here. What do we think the right split of the pie is? I don't think. Look, that if it's moved, I don't know what the internal calculations are, but if it's moved, I mean, that's why these deals so rarely happen. The stars have to align perfectly.
Do you think that it's a certainty that the Glencore's coal business actually folds into Red? Like, is there not another theory that's like Glencore want to take the coal business private themselves and return to the good times of the privacy that comes, and then you can have like probably even better trading margins on that. There's a lot of like coal blood in that company from a trading perspective.
There's a lot of cold blood, but I think the people who would be most inclined to take that company, say private, work for Glencore. So that's a bit of a conflict of interest. Um,
Management buyout, mate.
but I mean, in that sense, then who would run uh Rio Tinto?
Well, I don't. I honestly don't know, but I would have thought that'd be a compelling proposition to sell, the all of the base metal stuff, all of the like, get rid of it all, keep the coal, keep the wonderful Elk Valley like business, the thermal coal business, trading business over the top of that.
It's I think the takeaway from this week is it's very clear. If you think about October, November, the idea was Gary's horny for this idea, but the British Rio board would never. They told Sam Walsh told Ivan to go to hell in 2014, and Jakob and Dominic are telling Gary to go to hell in 2024.
You don't think Ivan's
Um,
been a part of this conversation too? Surely Ivan's been calling Dominic.
I don't think so at all. I think
Really?
Ivan's very happy in retirement.
Wow.
Just picked up some more Glencore stuff
He
as
owes a
well.
lot of stock.
I think it's quite clear now that Dominic Barton and the Rio board um, have a much more open view to this new generation of Glencore leadership, led by Gary in a way that their predecessors maybe looked at Ivan more guardedly. Dominic clearly is more open to, well, what would Glen Tinto be?
I'd love to read their Signal group chat.
I think that's a super valid view.
Well, also don't forget Dominic was the chair of tech before he was given the ambassadorship in China. I think it's very telling that when he left the ambassadorship, he went to be the chair of Rio. Didn't go back to Vancouver.
Should we try and squeeze a bit more in Koala? You recently sort of shared some thoughts on uranium as well. Next gen specifically, I think your thoughts were on the wavelength of good exploration results, and perhaps they were not totally factored in. But it's been pretty eventful this week in the world of uranium in your neck of the woods as well. What are you making of the sort of setup there?
Look, no view on the executive orders. I mean, we seem to get one on every other day of the week. Um, until I see the actual green lighting and FID of Western greenfield reactors, I don't really have a reason to get excited about the uranium balances. It's really just a next gen specific point, which is during that April meltdown, I did just take a look at next gen at one point privately with a few friends and just say, okay, like this thing's completely like at levels we haven't seen in a few years. Like, what's it imply? I don't believe the feasibility study that shows 25 million pounds for like five, whatever, 5 to 10, whatever years, then falls off. I don't think anyone's putting 25 million pounds into a 200 million pound market um, with the audacity to say, oh, we want spot pricing for everything. You add 10+% in one go to a spot market, we all know where spot's going, especially when you can see that we're not going to 10% growth in reactor builds all of a sudden. So we all know that that feasibility study sort of front loads the NAV. That's one of the reasons I always find the NAV of the thing a little silly. Um, there's also the question that I asked publicly, and I don't have an answer to it, but I really wish someone would answer it. Is in light of the fact that foreign mining realized that in Saskatchewan, sales tax is not refundable. What did NextGen assume for their capex at Arrow? Is the sales tax assumed it's refundable or recoverable, or is it assumed not recoverable? Um, and the other thing though is this: if the Patterson corridor extension, this PCE, um, continues to look this impressive, it's clear that the A2 formation, which has like 200 million pounds of like 4% at Arrow, um, and then the other A3 formation is like under 2% uranium. If there's another A2 like super high grade formation, um, whatever the life of mine average is going to be going through that mill, uh, it might not be, call it 10, 11, it might be closer to 15 to 20 once it's fully fleshed out and expanded. And my hypothesis has always been that you would do a phase one, let Arrow enter the market, get settled in, and then you would do a mill expansion some year will point between years 5 and 10. And that way you wouldn't disrupt the uranium market. Um, but look, it's great exploration. It's Western Forelands esque in a way, in the sense of there's so much more optionality in this project. The management I'm not impressed with. Um, I mean, pretty sure the reason the CEO wasn't at Canaccord is probably because he was at the Monaco Grand Prix. Lord knows if I was a junior CEO of a junior and I sponsored Aston Martin, I'd be in Monaco. Um, but I think there's just a lot of optionality, flexibility, and it's a great project. So much so that it really allows for so much annoyances, which we've all talked about before, whether it's the MCAP, physical uranium and convert, uh, and a few other things. But look, I think it's very fascinating. I think there's a lot of optionality. I mean, but really, and I haven't really, I've been lazy, and there's another better way to play that news release, but I'm not going to tell you about that quite yet. Um, but look, it's a good project. And I think as you look forward, and if uranium doesn't continue to collapse, um, I think it's just a good project. And yeah, it's a trade for me. I'll be very blunt. This is by my standards a trade. Now I've heard someone say my trades are other people's investments, but those are great assays, and it shows that there's a lot more flexibility in what this potentially can be. So let's see. I don't see a nuclear renaissance in the West without that thing coming online. Whether that comes online at the end of Cigar Lake, or if it comes online in 2030, I mean, I didn't really care if phyllo sulfide showed up in 35 or 40. So is
It's
what it is.
still the only deposit that really matters.
Have you got
It's
a
not
view
developed.
on one of the majors coming in, looking at an asset like that, or no interest in uranium for those guys?
I think I think it's too small of a market for Rio, who's liquidated. I don't think it's big enough for BHP to enter the market. I don't think Glencore wants to start trading it. I don't think Anglo can be bothered. I mean, I think Tech would face incredible scrutiny from their shareholders for doing that deal. Um, and then so who's left? It's Cameco, and we all know the story there. But I think there's actually a sidewinder opportunity here, which is I think Franco Nevada or Wheaton Precious would write a royalty or a stream on the Arrow PCE asset in an absolute heartbeat. Um, so I think there's probably $1 billion royalty or stream deal to do there. And also, I mean, why wouldn't Kazatomprom start looking abroad um, at M&A opportunities? Is anyone going to bat an eyelash if Kazatomprom took a 19.9% stake in NexGen to help fund the build of Arrow, where they're still hands off? It's just a financial investment, but they've now stood up a company that they still would have incredible influence in, and Cameco could then basically never get their hands on Arrow. I don't know. It's just some creative thinking I've been pondering as you see this play out. There will be a, I don't know when the gun goes off on this, but it'll be fun when it's actually time for Arrow to be in play. But I could be out of that thing in a week. It's one of those things you're constantly looking at, and you just. But those are great. Those are great assays.
I'd be curious what the Canadian government said about a Kazatomprom 20% stake if they would raise any issues.
It's a couple more things I'd love to get your thoughts on, Koala. Two recent deals. Look, well, one of them's announced in Harmony Gold is acquiring Metals Acquisition Corp. We touched on another one. Dundee Precious Metals rumored to be in advanced discussions to lob a bid on Adriatic. There's the UK takeover laws there, putting a timeline for a firm offer to happen. It's kind of trading above terms, sort of implying that that's almost a certainty, or at least a competitive outcome is gonna eventuate there, which is pretty intriguing. How do you read both of those? And also, by the way, Max was trading above terms when I last looked too, which seemed crazy because it's like a 2% break free. I don't think anyone else is coming in there, but yeah. Anyway,
What's But as I said before, it used to be called Metals Acquisition, but it's a producing pretty decent copper mine in a first world jurisdiction. Those don't trade cheap. Is Harmony the logical owner of that asset? I don't know. Sure, there's a few other folks who are probably got to be pondering that puzzle right now.
uh,
I mean,
I don't know. I'll take the other side. Yeah, I don't think yeah, synergies are really hard in that region, and there's yeah, I get the point
people
that's in
don't,
play.
people don't necessarily buy copper for synergies.
Oh yeah, of course.
It's a special commodity in that way.
Yeah,
I
yeah.
mean, if we change the name of Cobar to DeGrussa 2.0, would we all have a little bit of a chuckle?
Maybe.
I mean, South 32 between Sierra Gorda, Trilogy, I mean, Hermosa. I mean, there's just in your guys' neck of the woods, there's got to be a few people sitting there going, "It's right there. It's a plane ride across Australia, but it's still right there." So we'll see. We'll see what happens.
Yeah.
But bigger is better when it comes to these things. So I think every mid cap, small cap copper producer has to be at least asking the question. If Nick's not going to be a consolidator, he's actually a seller. All right, well, if you had M&A ambitions, what's it going to be?
Mm. Yeah.
As for Adriatic, we don't have terms. There's nothing been officially announced other than they're talking. I think there though too. I mean, you have a Eastern European producer. Um, it's in the same region. The cash flow if Varus ramped up would be phenomenal. Dundee has a pretty a balance sheet with a lot of flexibility and a lot of cash. Adriatic, on a standalone basis, we're gonna have to spend this year paying back Orion and Trafigura. I mean, love the Adriatic team, but I mean, how many equity raises to ramp up and extend the runway can you do? But they actually have to deliver. And I don't know, that's an interesting idea where you put those two together, put some nice cash flow into Dundee. And Dundee has a really interesting discovery within their portfolio. And does this combined operating platform give them the cash flow to really approach that discovery aggressively? I think there's a lot of synergies in that opportunity. I mean, the Dundee stock has done well from all I can tell since this has been leaked.
which is interesting,
And
right?
that seems like a good management. I mean, well, that's the market saying, hey, this actually makes sense. Please proceed. We want to understand more.
Yeah. Do you think there's risk that that deal falls away though?
How so?
Well, there's a deadline on it. It hasn't been a firm thing yet. And
Well, that's
if Dundee doesn't come to the party with a firm offer, then does anyone else come for Adriatic, and then does Adriatic have to wear, the potential, inflexible period of cash flow during ramp up still themselves?
well, the mine has to still run while this
Yeah.
goes. And if we've kind of learned from Anglo Peabody, just because you announce a deal doesn't mean you can not take your eye off of operational excellence.
Mm,
Um, so the ramp up has to continue.
certainly.
Um,
Certainly. Yeah.
but I mean, look, we saw this with Anglo BHP. Remember, there was like a 1 or 2 week extension to continue the conversation.
Yeah.
It's just the way the UK does these things. I mean, it clearly puts an urgency on. Okay, let's get on with it.
Yeah. Yeah. Uh, Alphamin, Metals X. I know you've been buyers and sellers of, well, certainly Metals X, but ding 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 on that front. But Alphamin, a long term position for you. I'm not sure if you trimmed any when the news came out, or you just left it as a
I
hold.
own more. I own more than I did at the beginning of the year. It's been a fun year so far.
Yeah.
All I'll say on that is, it's truly a case of what doesn't kill you makes you stronger. There's an implicitly a U.S. flag at BC now. And what does it tell you? If in the years that I've known you guys, if I had told you, um, doing the very rough mental models in my head, if I told you that Alphamin, a DRC tin producer in North Kivu that had to shut off for a month due to rebel war activity, trades at a higher EBITDA multiple than Metals X, which owns 50% of a tin mine in Tasmania, Australia. I think you all would have thought I'd lost my goddamn minds. But it tells you that the market's kind of starting to understand the Alphabet story a little bit better. But also, it's a condemnation of Metals X,
Yeah. You're
which
buying the
across
equity, not
these
the
other
EV, unfortunately,
yes.
with Metals X.
Yeah, except the problem is they seem to have very interesting ideas of what to do with the cash.
Yeah.
And that's a problem. I mean, and then life's just too short to deal with that. And if you think about it, if you can get the commodity price right, can you can they execute on the operating plan? A mining company generates a certain amount of cash. So can we get the commodity price right? Can you execute on the operating plan? Generates cash/capital. Third question, most important question in this multiplication. Are they going to create value with the capital, or are they going to light it on fire and not do value creative things? Now, whether that's we give dividends, we do buybacks, we do M&A, we do growth, we pay off debt to delever and de-risk the company. But capital allocation is a huge multiplier in our business. And yeah, I just don't think chasing every little tin project around the world. I mean, do something bold if you're going to do that. But yeah,
I kind of
it's
think
just
it's
kind of wild. It's just wild to me. It's just wild to me. You have a like you're a shareholder, Travis. I mean, it should bother you to no extent that
oh my
Alpha, given a war zone, a war happened, the mine got evacuated, turned back on, and you're going, we don't get the same valuation that they do.
Yeah, I don't think you'll find a massive catalogue of me appraising the capital allocation of Metals X despite being a shareholder, but I think it's less bad now. But it's yeah, I do find the investments in the junior tin development story is kind of interesting. I think there are better ways to maybe use the capital in the short, medium term, but I just wonder if they're kind of land banking. Like, are they actually going to finance those things? Not sure. I kind of just feel like they might be land banking. But that's
Yeah,
my
but then why? But then if you're going to do that, I mean, I don't have the precise valuation on it, but I mean, Solid Core, the gold producer in
mm,
Kazakhstan, bought 55% of Tin One Holding, which is the Sirimbet tin deposit in Kazakhstan. Um, and that was, if I get this right, I mean, that was maybe $100 million of cash.
there was a bit to that
It
deal.
wasn't.
There was a bit to that deal. There's anything with solid core. There's a bit that doesn't meet the eye.
Well, 82.5 million bucks. I mean,
Yeah.
that could have been Metals X trying to do that deal.
I don't think Metals X could have bought it for $82 million.
What do you think about the capital allocation with your Alphamin hat back on? They're going to start generating good cash, and hopefully that continues. You just want
I
that
think there's
bought
a.
back
I think.
dividends.
I think you. They've been quite clear they're going to take the debt down to 25 million on the local facility. Um, I think it was the right thing to let's see them print a clean 2Q and 3Q. The next dividend, if it comes, and it should come, would be declared in October, paid in November. Um, I have a few ideas for some creative things they could do. Um, but I'll keep those to myself for now. But I think you got to get back. You want to get back to those that 6 cent Canadian semi-annual dividends, and maybe even a little higher.
Anything else you want to leave us with before we part ways with you?
Uh no, no. I
I thought you
no.
mentioned
We
US
will.
Steel.
Glad you brought it up. 17 months. I'm one stubborn son of a bitch, aren't I? But look, uh, I think that the right thing was done there. That's probably something I'm going to reflect on a lot more over the next 3 months. That experience, that whole investment in its entirety. Um, but it's kind of wild to think that 14 billion of investments coming from Nippon. I mean, for a sector that we complain about being capital starved and capital constrained, the US steel industry will not be capital constrained. And it's all thanks to one new participant. And I think it's kind of amazing to think that Lorenzo kicked this all off with a hostile after US Steel, politicized the union to say, I'm the only person who can buy this. And in doing so, sparks a bidding war.
Yeah.
And now his peer competitor is someone who's, I mean, the guy from Nippon who did this deal basically flew between Pittsburgh and Washington, D.C. for the last year and a half. Now he has to spend $14 billion improving the US Steel assets and creating new capacity while Cliffs is levered and has not made the same investments. And I just got to imagine he's going to enjoy watching Lorenzo just stress out, just watching Nippon just basically bear hug the blast furnace steel industry in the US. Because I don't know what Cliffs does from here. I just don't know.
Well, that's a wicked place to leave our chat. Koala, it's been a pleasure speaking with you as always. There's always a lot to reflect on, and lots of different parts of the market that you've got your eyes on. Love your insight as always. So thank you very much.
Cheers, Koala.
Cheers.
Fantastic, mate. That was an awesome conversation. A massive thank you to all our partners that make this all possible. Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, KCA Site Services, Black Diamond Drilling Services, Cross Boundary Energy.
Hooroo.
Hooroo.